Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Monday, June the 21st, 2010. We believe today may be one of the few last opportunities we have to warn investors and traders about what we're seeing, and we'd like to take that opportunity to do so to provide this information for anyone who would listen. Have a look at the charts. Last Friday, on June 18th, we showed you how to spot a head and shoulders sell signal that happens in a market when it's peaking, when it's after a major move to the upside. You'll see these signals. They're very strong signals, and they are warnings of a big move lower. You don't need to know all the technicals of this. If you don't have a technical background, don't worry about it. We'll point it out for you. The main thing to point out is the formation of the first shoulder, the formation of the head, which supersedes the previous move to the upside, and then a formation of the right shoulder, or the last shoulder, before the breakdown and we go much lower. The main thing here is that the shoulder formation will not supersede the previous high of the head, and though we may be bouncing around for a couple of weeks, we will not make a new high. You've seen this before. If you look back in 2007, you can see the head and shoulders formation, which signaled a major sell move before the 2008 crash. What concerns us more is the correlation we've found between the current chart and the crash of 1929, which at that time was referred to as a recession, and the April peak of 1930, which led to the Great Depression. Have a look at this chart. First, I have to point out on this long-term chart of the Dow Jones Industrial Average, this is the period of 1929 through 1930, 33, I believe, and you'll notice right off the bat the head and shoulders formation that signaled the crash before it happened. And this crash that began due to a credit crisis in the U.S. stock market fell roughly 50%, then bounced back higher from early 1930s to a new formation of another head and shoulders pattern right here, here, and here before a big move much lower. What caused this rollover in 1930, amazingly, is or was a credit crisis in Europe where Germany defaulted on their debt. Sound familiar? Let's have a look at the current chart. This is the current chart of the Dow Jones Industrial Average starting back from 2007. Here you can see the peak signal, the head and shoulders signal, before the 50% move lower, roughly 50% move lower, due to a credit crisis in the U.S. At that time, or at this time I should say, it was due to the 10-to-1 leverage in real estate. Doesn't really matter what asset class it's in. It was a credit problem in 1929. It's a credit problem in 2008. You'll also notice this major bounce right here, a move in such short span of roughly 70% that has not happened since 1930. You'll also notice the head and shoulders pattern setting up again, and once again you have high unemployment rate. In both cases of this bounce at this level, people believe that the recession, what they were calling it at that time in the 1930s, and currently we're calling it a recession, the big bounce here believed to be the end of it, but you still had high unemployment, and now we are rolling over in April, just like we did in 1930s, due to a credit crisis in Europe, this one being the European Union issues. So if it looks like a duck and sounds like a duck, I'm thinking it's probably a duck. I would caution everybody to double check their analysis if they're long this market, if they believe they're getting a buy signal back during this previous time period. You'll notice during this formation of this right shoulder, there was a buy signal, but it was a fake. If you look down on the other indicators, during the time period of the formation of the right shoulder, you got an oversold condition by the slow Stotch, which was a fake buy opportunity and ended up failing and going much lower. That is what we're seeing set up again today, right here. Fake buy opportunity, which will end up failing at this level. You also notice during this time the MACD was trending lower. At the same time, the MACD is trending lower. The conditions are identical. I would caution everybody to pay close attention to their investments. If you have not been to our free website at PerfectStockAlert.com, it's 100% free. All we ask in return is you refer a friend, and please by all means, subscribe to our YouTube channel. We work very hard to serve you, provide you the best technical analysis we can. Absolutely 100% free, but we need your support to continue doing that. So please subscribe to our YouTube channel. Let's have a look at our disclaimer. The disclaimer: the information provided here is our opinion only. You can read. Regarding the overall markets currently for the next week or so, we expect choppy trading as the formation of the right shoulder continues, and then we expect a very large move lower. We do not believe the head will be taken out. We believe we've already seen the high, and we did call that high based on our own technical analysis methods. You know, you can argue with it all day long, but unless you can show us a reason better than the ones we've just given you, you're probably wrong.